morning, good afternoon, and good evening, my dear cherished students. I hope you enjoyed the introduction insurance claim story between Badri, Saryu, and Nanda. My dear students, if you are watching this video without first watching the introduction, please do so before proceeding with this video. The focus of today's session will be on determining the closing stock on the date of fire as well as the claim amount. What are the various problems we encounter while solving the sums? Simple method for finishing the sums in less than 5 minutes. Despite the fact that you are familiar with insurance claims, don't skip a second while watching, because I am trying to boost your knowledge.
As far as I know, there has not been a question paper without insurance claim the last 10 years.
Now, let us enhance our knowledge by using examples. Insurance policy 14 lakhs and loss incurred 10 lakhs. How much the insurance company will compensate? Policy has taken for 14 lakhs, whereas the loss incurred is only 10 lakhs. How much the insurance company will compensate? 14 lakhs or 10 lakhs? The answer is 10 lakhs, because insurance is an indemnity contract. Policyholder cannot claim the amount more than the actual loss suffered. Concept number 1 is indemnity. What do you mean by indemnity, Nana? Policyholder cannot claim the amount more than the actual loss suffered. My dear students, for finding closing stock on the date of fire, we prepare memorandum trading account. A question may arise in your mind, sir, from which date to which date we should prepare memorandum trading account? From the beginning of the year in which the fire accident occurred till the date of the fire, trading account should end on the date of the fire. Suppose fire occurred on 15th August 2022. Again, a question may arise in your mind, sir, whether we should consider financial year or calendar year. It depends on the opening stock and other relevant information. Let's say opening stock information is given as on 1st January 2022. It implies they are following calendar year. So, we should prepare memorandum trading account from the beginning of the year 1st January 2022 till the date of fire 15th August 2022. Let's say opening stock information is given as on 1st April 2022. It implies they are following financial year. Then we should prepare memorandum trading account from 1st April 2022 to 15th August 2022. I hope I am communicating properly. In practice, opening stock, purchases, sales, information will be extracted from various sources. But for academics, all of the information given in the question except closing stock on the date of fire. Why this statement termed as a memorandum trading account? Because the statement contains estimated information. That is why we called it as memorandum trading account. Let's say we proved to the insurance company 10 lakhs worth stock was available on the date of the fire. However, whatever stock you had on the date of fire would not have been destroyed by a fire accident. Will you be taking selfies when the fire breaks out? Or will you try to save the stock or put off the fire? What will you do if you find yourself in that situation? You have the option of putting out the fire or saving the stock. Some stock would have been saved. This stock is referred as salvage value. I understand that some exceptional cases may be concerned with uploading status, updates to Instagram, Snapchat, WhatsApp and other social media platforms, but we are unconcerned. Stock on the date of fire 10 lakhs and salvage value 1. Sir, what you are going to do with this salvage value? To calculate actual loss incurred, subtract salvage value from closing stock on the date of fire. So what is the closing stock on the date of fire, Nana? 10 lakhs minus salvage value 1 lakh. What is the answer? 9 lakhs. What is the actual loss suffered? 9 lakhs. My dear students, mark my words. In this chapter, actual loss is termed as loss of stock. Actual loss is termed as loss of stock. So loss of stock, closing stock on the date of fire minus salvage value. Next question arises, what will be the claim amount? If the average clause is not applicable, the claim amount will be the policy amount or the loss of stock, whichever is less. What is the policy amount, Nana? 8 lakhs. What is the loss of stock? 9 lakhs, whichever is lower. So claim amount will be 8. In a few minutes, my dear students, I will explain in a greater detail what is an average clause. One thing is sure, we cannot claim more than we have actually suffered. Suppose closing stock on the date of fire 5 lakhs and salvage value 2 lakhs. Policy amount 4 lakhs and average clause is not applicable. Compute claim amount. Stop the video and leave your answers in the comment section. Keep in mind, my dear students, always remember when average clause is not applicable, claim amount will be policy amount or loss of stock, whichever is lower. So closing stock on the date of fire minus salvage value will give the loss of stock. So loss of stock equal to closing stock on the date of fire 5 lakhs minus salvage value 2 lakhs equal to 3 lakhs. Loss of stock is 3 lakhs. Claim amount will be policy amount or loss of stock, whichever is lower. So 4 lakhs or 3 lakhs, whichever is lower, na? So 3 lakhs will be the claim amount. Dear students, I hope you understand what I am saying. For computing the claim, we need to apply the average clause if provided in the agreement. Sir, I am not understanding. What is average clause you are telling? The idea behind the average clause is to discourage underinsurance. Sir, what do you mean by underinsurance? The policy amount being less than the stock on the date of fire is called underinsurance. My dear student, to know whether the policy is underinsured or overinsured, always compare policy amount with the closing stock on the date of fire. Policy amount with the closing stock on the date of fire. Some students, while solving the problem in a hurry-burry, they will compare with opening stock or loss of stock. So it's a beginner mistake, don't do that. So listen carefully. My dear students, stock on the date of fire was 10 lakhs. Policy amount 8 lakhs. In our case, whether policy is underinsured or overinsured, what is the closing stock on the date of fire? 10 lakhs. What is the policy amount? 8 lakhs. So policy is underinsured. Nana, to apply average clause, two conditions cumulatively must satisfy. Condition number 1, policy is underinsured and average clause is provided or mentioned in the agreement while taking insurance policy. What, Nana? If it is mentioned in the agreement and if the policy is underinsured, average clause is applicable. You could tell, sir, insurance companies are cheating as. No, Nana, you should not think that their motive is to discourage taking under insurance, because if the risk is fully covered, they will compensate the full amount. In our example, what is the actual loss or loss of stock? 9 lakhs. We have taken a policy for how much? 8 lakhs. You will tell now the insurance company has to pay me 8 lakhs. Your answer is correct. If it is not mentioned in the agreement, that average clause is not applicable. I am not telling 8 lakhs cannot be correct. Average clause is something that if it is mentioned in the agreement, then we will apply. Now we will find out if the average clause applies and how to calculate the claim amount. Let's say stock on the date of fire 10 lakhs, but you took policy only for 8 lakhs. Salvage value 1 lakh and average clause is applicable, which means you gave the risk to the insurance company only for 8 lakhs. out of 10 lakhs, how much risk you are transferring to the insurance company? Only 8 lakhs. If the policy amount is less than the closing stock on the date of fire, it is called what, Nana? Under insurance. To apply average clause or not, we need to check two conditions. Condition number 1, the policy is underinsured, condition is satisfied, and second condition, average clause is mentioned in the agreement. If both these two conditions are satisfied, then only we will apply average clause. Which means on the date of fire, our real risk was for how much, Nana? 10 lakhs. But we took policy only for how much, Nana? 8 lakhs. Let us calculate proportionate of risk cover. Total risk on the date of fire is 10 lakhs. How much, Nana? Total risk on the date of fire is 10 lakhs. How much risk is covered by insurance company? 8 lakhs. That proportionate, which exactly 80% of total risk was covered by insurance company. Now the insurance company will only compensate for the 80% of the total risk covered. 80% of the total risk covered. If you're not taking policy for full risk, which means that is called under insurance. Insurance company is saying, if policy is under insurance, we will also compensate you proportionately. Claim amount will be, what was the total risk on the date of fire? 10 lakhs. In that 10 lakhs, how much you insured? 8 lakhs. Though you lost 9 lakhs, what was the real risk? 10 lakhs. In the 10 lakhs, how much you covered? 8 lakhs. So, closing stock on the date of fire, the real total risk is 10 lakhs. How much is covered? 8 lakhs. So, 8 lakhs divided by 10 lakhs. What is the actual loss you suffered? 9 lakhs. So, 9 lakhs into 8 lakhs divided by 10 lakhs will give you 7 lakhs 20,000. This is the proportion. In this proportion, only you will get claim. Application of this proportion is called average clause, is 7 lakhs 20,000. I hope you understand this. I want you to learn a concept. Every book has a formula. Everyone will tell you the formula, dabba the formula. But only few people will tell you the concept. One among them is me. You may be wondering why a businessman cannot obtain the full insurance. Pichoda sir, emanna full insurance teeskochu kada. Are the business owners or unsound mind? They should have purchased the full insurance. My cherished students, I can sense your emotions. So stay cool. Dear students, we are not gods to know everything in advance. On August 15th, 2022 at 8 p.m., a fire accident will occur in our godown, destroying stock worth rupees 10 lakhs. If we know something is going to happen, we will either take precautions or insure the entire amount, because we cannot predict what will happen in the next second. So, businessmen will take policies based on the average stock they own. I hope I was able to add some value. Before we move on, if you enjoyed this video so far, please hit the like button and remember to subscribe to our channel for more great content, as well as share it with others who need it. A question may arise in your mind, Sir, can a businessman claim that average clause is not always applicable to me? Jingi chaka. No. You should understand that it is not the businessman who will say, I want an average clause, I don't want an average clause. Insurance company will tell at the time of you taking the policy that for this policy, sir, average clause is applicable or not. Some companies will state that they will not apply the average clause. Therefore, if the average clause is not applicable, whenever average clause is not applicable, claim amount will be actual loss. Actual loss is nothing but loss of stock or policy amount, whichever is lower will be your claim amount. When you solve a problem as a student, one issue is that students are aware that we have the complete answer, complete concept in our mind. However, questions are sometimes absent of information. So at that point, how a student reacts to those things is the only an added benefit of attending a classroom. Otherwise, self-preparation from a study module is more sufficient. If nothing is said in the question, whether the average clause is applicable or not, it is assumed for academic purposes. For academic purposes, that average clause is applicable and give a note. Only if the question specifically states for this policy, for this insurance policy, average clause not applicable, like that very clear mentioned, then the answer will be policy amount or loss of stock, whichever is lower will be your claim amount. If nothing is said in the question, we need to apply average clause for academic purposes. I will give a detailed notes. Don't get confused. I am explaining concept only. My dear students, let us recall what we learned. Insurance is an indemnity contract. What do you mean by indemnity? A policyholder cannot claim the amount more than the actual loss suffered. For finding closing stock on the date of fire, we prepare memorandum trading account. From which date to which date we should prepare memorandum trading account? From the beginning of the year in which the fire accident occurred till the date of the fire. Trading account should end on the date of fire. The stock which is saved out of from the fire is called salvage value. To apply average clause, two conditions must be satisfied. Condition number 1, average clause is mentioned in the agreement and policy is underinsured. Sir, how to determine whether policy is underinsured or overinsured? Always compare policy amount with closing stock on the date of fire. If policy amount is less than the closing stock on the date of fire, it is underinsured. If the policy amount is more than the closing stock on the date of fire, it is treated as overinsured. Whenever average clause is applicable, claim amount will be calculated proportionately. Whenever average clause is not applicable, claim amount will be loss of stock or policy amount, whichever is lower. Loss of stock or policy amount, whichever is lower. But for academics, in the absence of information, always assume average clause is applicable and give a note. A businessman cannot claim average clause is applicable or not applicable. Insurance company will tell at the time of taking the policy whether average clause is applicable or not. I hope you enjoyed the session. In the next class, we will learn how to approach the problem in a simple manner. Please click the bell icon and share with your friends. My dear student, bye for the day.